Good morning. Thank you for joining us for today's webinar. My name is Sean O'Brien, the president of QuickRate, and I'm pleased to be joined today by David Surrey. David's going to take you through the second half of today's presentation, but wanted to thank all of you for joining. As is the practice, we will send out a link to the recording of today's presentation, along with a copy of the slides and an email that will probably you'll receive tomorrow afternoon or Friday morning. So be on the lookout for that, but we will send you a link to the recording and a copy of the slide deck. A couple of things we're just going to touch on today, just really kind of what we're seeing in the marketplace, really kind of what we're all experiencing in our institutions. Dave is going to walk you through the marketplace, and we'll always take questions and answers. You can certainly submit those during the course of the discussion using the chat feature or the Q&A. We'll monitor those and either take them in an appropriate break or certainly at the end of the presentation. Just a reminder, we thank you all for joining our webinars. Certainly you probably have seen marketing regarding IntelliCredit and our CECL Solver solutions. So again, if we can be of help on any of those, certainly don't hesitate to ask. Just a few polling questions today, if you don't mind indulging us. Pretty straightforward yes and no questions, I believe, but just always trying to get a sense of what you're experiencing matches what we're kind of feeling or sensing. The first one's just really around deposit growth. Have your deposits grown this year? So just a simple yes or no, and we'll give this 15, 30, 45 seconds, and then we'll move on to the two other polling questions. Participating, we'll share those. So this is positive. 68% of you have seen deposits grow this year. 32% of you have not. So thank you on responding to that question. Secondly, just needing deposits. Are you anticipating needing deposits over the next 12 months? Is loan growth going to be such that you'll be needing deposits? Okay, this one's a little bit more evenly split. 55% of you do not anticipate, 45% of you do anticipate. So thank you again. And finally, our final question. Whoops. Stop sharing here. There we go. Do you expect to have excess liquidity to invest during the next 12 months? So a little bit of a follow-up to the previous question. And we'll just give this 30 seconds or so to finish. Percent of you do, and 37% do not. So again, whoops, I didn't share the results. There we go. Thank you again for participating in the polling questions. We will include the results of these questions as well in the email that will contain the link to the recording and a copy of the slides. So again, thank you all very much. So 2025, as you look at the numbers, seems it's been a pretty decent year, right? I think certainly a lot of apprehension as we entered the year, and certainly some maybe call it heartburn or consternation in April. But credit union assets have continued to grow. This quarter was a little bit slower than we saw in the first half, but share deposits continue to grow, which kind of mirrors with what the polling question that most of you are seeing. Share growth, albeit again a little bit slower pace. Loans have continued to grow. One thing we have noticed is external funding has grown across the industry. Delinquencies and credit quality, remain stable. Certainly, we've seen some past dues on the consumer side and auto side, but overall, nothing's risen to an alarming rate of charge-offs. Just certainly an increase in the past dues, and net income is up. So again, by all accounts, it's been a good year. Not surprising to probably anyone on this presentation, and echoing what we discussed last quarter. The interest rates actually should be falling. Interest rates have impacted margins. Member behavior has been impacted. Again, I think we saw the uptick. Now we're seeing the downtick. But every deposit we are seeing increased competition for. And I think, again, I think we never take our members for granted, but I think we have to take a different kind of approach with them, where, because again, I think the fight for deposits and share deposits are going to continue to be waged. We have to make sure we're focusing on all of our members, and particularly those longer term, higher balance members. I think stability of deposits at some point, has to take precedence over cheaper deposits, because we do need to reward those longer term customers, and we do need to fight for those, because they are the ones that other institutions are coming after. Moving forward, have we seen the high in interest rates? It feels like we have. I felt like last quarter we were certainly approaching it, but with the rate cuts at the front end, I think the front end of the curve is certainly going to continue to probably stay where it's at or lower. And how does that impact our investment strategy, right? Again, a lot of us, kind of run a 2-year, window, but if you do have the opportunity, and if there is an additional yield to be gained, if you can lock in anything longer, that's, certainly an individual institution decision. But we are probably starting to see, a short-term high in rates. Now it remains to be seen if inflation persists, if we'll just get back to a little bit of a normal yield curve. But certainly, as you could noticed in the marketplace, they've come down and they're a little bit flat again. So we'll just have to wait and see how that looks moving forward. But again, if we probably have seen a little bit of a short-term peak in rates. Just a reminder of the rates, again, terms from anywhere from 7 days out to 10 years. And again, the kind of in that 4%, high threes is where we're seeing, again, kind of a little bit of a flat offering. But we are, going to be your best opportunity to attract those highest yields. And so again, where you can lock those in 2-year ladder, that always is the best scenario. One of the things we've been, just kind of wrestling with and talking to, all of, our credit union customers, and just in general, is this, we've always fought for deposits. But I feel, increasingly, right, there's just the ongoing disintermediation just makes it challenging and more difficult every passing year, right? I mean, I'm old enough to remember when, brokerage accounts were really just starting to make an impact on institution, deposits. And now today in most communities, there's an Edward Jones office or some local, brokerage office that, it has as many or more deposits, as many of the institutions in that market. Fintechs continue to offer high yield accounts that are eating away and attracting and kind of inundating our members with high yield accounts. A lot of the money that used to just sit in maybe a member checking account now has found its home in Venmo, Zelle, PayPal, or an Apple account, right? Many of us are trying to offer those same services to our members, but again, it's another person, another company, whittling away at our member base. Retail gift cards, right? Again, sometimes they can come back to us from a custodial account, but they have balances that sit that again used to be find a home in our in our credit unions, and now, increasingly the number of online gambling accounts, again, just whittling away at our balances. So, I think we're not going to get away from these challenges. It really makes it difficult. Pending legislation around stablecoin issuance will, again, in my opinion, be another competitor for our deposits. So it's just an increasingly challenging environment that we have to navigate. In addition, just economically, the persistent inflation that we've really seen post-pandemic, leaves our members with less surplus deposits. A slowing economy, leaves both businesses and consumers, oftentimes reluctant to borrow. In other words, they're going to use their cash first before they want to borrow. Unemployment, while still traditionally and historically very low, when it does tick up a little bit, that also is another drain on consumers' balance sheets. And then I think increasingly, we just see that the fight for local, share deposits is often a zero-sum game, right? A lot of times, one institution's advance comes at the expense of another institution, and vice versa. So, again, locally, we're going to have to continue to just, work increasingly and rely on our own marketing, efforts and budgets. If you can speak to your customers digitally, we certainly want to try to do that. And then just the hard work of you and your teams in the branches. So it's going to remain difficult. They're going to probably, marginally and relatively remain expensive. And we've seen and continue to see CDs be the reliant tool for funding growth. And again, I think we'll have to continue to offer competitive market rates. Again, as I mentioned, I think the biggest challenge that over the next couple of years, right? I think again, as more digital efforts are made, is really just staying in touch with our members, both physically the way we normally do, but just increasingly digital, because the fintechs, all these other competitors that we discussed at the top, they're going to be reaching out to individuals on a digital basis, right? And so we just have to recognize that our best customers, our best members, are going to be targets of other institutions. So we just have to stay in constant contact as best we can. I'm going to probably repeatedly, uninsured member deposits continue to be a focus. I think they should be a focus internally. I think there'll be a focus for regulators, knowing who they are, how much of concentration they might represent in our institution, I think are important. And then to make sure you have contingency sources to cover those balances, right? Because those are the ones that gives everyone anxiety, because they're the most likely to move first, and then they're the most likely to move quickly. And to making sure we have liquidity sources to mitigate or combat those or cover those is increasingly imperative for all of our institutions. So just a reminder, again, I'm talking about investing and issuing today, but just make sure you have, funding sources. Again, QuickRate can be used both on the issuing side and the investing side, but just make sure you do have some contingency funding sources at the ready. So some final thoughts and takeaways before we get David to take over the second half of the presentation is, again, you obviously, credit unions, you do a great job, working with your members. There's a tremendous amount of loyalty, again, so I think that won't go away, but I think we have to be recognizing that because of that loyalty, people are going to try to get those members, right? So maintain, our discipline with share pricing. I think we want to reward stability, right? I think, again, I think members who've been with us a long time have multiple relationships. We want to reward them first over maybe a single relationship account. Review our policies and philosophies on how we're going to manage the liquidity institution. Keep those uninsured member deposits, top of mind. Again, you consider us as a contingency source, and just stay at the ready, right? I think liquidity, is the lifeblood of our institutions. We have it till we don't. So just remain diligent and vigilant, and again work to continue to drive those share deposits higher. Okay, so at this point, I'm going to turn it over to David. David, do you want me to move your slides, or you want to share?
I'll go ahead and take it. Thank you, Sean. Let me
Okay.
see if I can share. All right. Share, and let's pull up that presentation.
All right.
And Sean, can you see my screen okay?
You can. You're all set.
All right, fantastic. Thank you so much, Sean. So before I get started, I would like you all to join me in wishing Sean a happy birthday. Happy birthday, Sean. All right.
Thank you, David.
With,
Thank you.
with that being said, let's get into some of the highlights for Quick Rate. So Sean just mentioned this about a minute ago. You can use Quick Rate on both the investing and funding side. I've worked with Sean for the last, excuse me, 2 decades. And for the most part, I work with credit unions on the investing side. Although that has shifted in the last, let's say, 5 or 6 years or so, where credit unions are doing a lot more funding as well. So you can use it on both sides of the balance sheet as a credit union. You can, if you have excess liquidity, you can do some investing now. And then if you get into a position maybe 6 or 12 months down the road where it's your investment, your maturing investments are no longer keeping up with loan growth, you can always use Quick Rate as a funding source and bring in money from other credit unions. And currently, and for the last, let's say 15 years or so, our membership base has been around 3,000 members, financial institutions. Of those, it's been anywhere between 13 to 1,500 on the credit union side, again, mostly investors. And then roughly 1,700 or so of those have been our community banks, usually on the funding side. But again, you can use it on either the investing or the funding side with your Quick Rate membership. Important facts to remember about Quick Rate is that we're a direct platform. So to define what that specifically means, direct platform, we're not a broker where you're sending your money to us when you're investing in a CD. You're sending it directly to the issuer. So hence the word direct. And that is very important to us and has been very important to us since our existence. Since the inception of our existence. So we want to make sure that our platform, that everybody understands that it is a direct transaction between the investor and the issuer. It is non-brokered, also very important for both the investing and funding side. Tends to be a little bit more important for our banks than our credit unions, but it is classified differently on your call report for our credit unions than it would be if it was a brokered CD. Our tools are automated, so the whole process of which I'll show you in a minute is automated. So there's really not having to fill out any paperwork and having to make phone calls or what we used to have to do, which was a lot of faxing. So none of that is anything you do anymore. The point being here that it's all automated. So reasons for our success, our rates, when you compare it to brokers and other sources for CDs has always been better. So you'll see that for yourself when we go into a live presentation of this. One of our biggest is also our customer support, which Jennifer, Andrea, and Zoe, most of you that have worked with Quick Rate know those 3 names, and they're one of the biggest reasons why our client base sticks with us. And then, of course, lastly, how easy we make the investing process and keeping up with all your CDs, meaning how you report on those CDs, as well as the portfolio management of those CDs. So one of the major things here, we wanted to let you know that we'll be celebrating 40 years next year. So we have been around quite a while. We are a recognized industry leader in both direct investing and funding. And now CECL and analytics has also been something that we've been concentrating on the last few years as there's been more of a regulatory spotlight on that. Our regulatory specialist, Debbie Walker, does meet with the FDIC and the NCUA to kind of stay on top of all the important topics for our credit unions as well as our banks. Now, when we send you this presentation, you'll be able to compare some of these rates, and this is what Sean showed earlier and what we'll go into when I log in live into the presentation, but you'll be able to compare your rates at different terms to see what we're saying is actually true, that some of our rates are some of the best in the market as far as CDs go, anywhere from the very short term to the very long. And as you can see from the date of this was just pulled on the 10th. Some more important facts about QuickRate to remember, just quick ones. There's a larger audience of banks available that your broker may or may not have. There are a lot of our banks that we talk to, our issuers, that simply say, I don't want to work with brokers. So this can be your one source, kind of one-stop shop to access CDs. It doesn't have to be, of course, but it's one great place to not just invest in CDs if you're on the investing side, use it for funding if you wanted to bring in deposits from other credit unions, and then, of course, a way to keep up with all of those. So let's take a brief look at the marketplace. So for that, let's go to QuickRate. All right. I am logged in live into the QuickRate marketplace, and what I'm going to do is show you a kind of a quick tutorial of how this works. What happens when you log in as a credit union investor. We'll talk a little bit as well about the issuing side. Most of you are here for seeing it from the investing perspective, but we'll talk a little bit about the issuing side as well towards the end of this. So that being said, if I was a credit union investor, this is the home page where I would simply see a snapshot of the rates. I would also see if there's anything going on in my dashboard. Do I have any money maturing today? If I was on the issuing side, do I have any deposits maturing today? And then, of course, it links me to those. Quite a few more links about whether I'm an issuer or an investor, if I have rates expiring, if I have any new inquiries, if I have any rollover inquiries. We'll talk about what all that is. So everything you're going to need is going to be under this main header here. We'll jump right to the very first option, View Rates. So View Rates is what I've always referred to as your bread and butter page. This is where you're going to do most of your work. And there is some personalization that you can add to this page. Right now, what we're seeing is kind of a basic. I'm looking at the top 50 institutions, issuing institutions, and I'm looking at all the different terms. If you look towards the middle of your screen, you see 7 days all the way up to 10 years, as well as special terms. So right now, excuse me, the 1-year term is highlighted. It's shaded a little bit darker, meaning that's the one we're looking at. If I wanted to personalize this, for example, to show me only what I would call the medium or middle term buckets, that would be here, 270 days to 3 years. If I wanted to see the longer terms, I would select the last option in the drop-down menu, or if I wanted to see short term. So for now, most everybody, and throughout my career, most credit unions have invested in the 1-year term and stayed somewhat shorter. Again, it's up to you where you want to invest. If I wanted to switch from the 1 year, how easy that is, I would simply click on the 2-year term. It would then shade that a little bit darker to let me know that's what I'm looking at. So the next thing as an investor, when I come in here, which by the way, one important thing to mention, most of you probably have CDs that you're invested in. This is not your first rodeo investing in CDs. You either have them through a broker, maybe the Simplicity program, or through some other form or fashion. If you decided to become a QuickRate subscriber, what I mentioned earlier about this being a one-stop shop, you have your other sources, you have your QuickRate as your main source. When you want to invest in CDs, we will load your current portfolio into QuickRate to make sure that you don't do what we call double placing. Most of our investors do not want to go over the $250,000 limit. So what they simply do is they load their portfolio in. And as those credit union investors invest in quick rate CDs, you'll notice here that a check mark appears. So whether this is an institution that you previously placed with before becoming a subscriber or as of being a subscriber, it'll let you know that I have a certain dollar amount here already. That's just a way to make sure that you're not going to double place with that institution. So the ones we want to concentrate on would be the ones with the pencil mark. So first, if I was interested in finding out a little bit more about the bank, it's all hyperlinked to the bottom of the page. In this case, Community Bank and Trust in West Georgia. I see basic information: address, phone and fax number, insurance number. By the way, these are all institutions within the United States. We do not work with international institutions. Then you're going to get details about the CD itself. So the minimum and maximum deposit requirements, the interest frequency, the safekeeping receipt, and then of course how you're going to be paid by that institution, whether in this case it's a monthly interest frequency, so whether you're going to receive monthly checks or ACHs. So in this case, this institution is offering both options, which means at that point it becomes your choice which way you'd like to receive those interest payments. We clearly make the issuing institution post if there are any wire in or wire out fees, and then we get their financials from the FDIC in this case, because it is a bank. We get it obviously from the NCUA if it's a credit union. Any history changes, you don't have to keep up with those. We do that for you. So if you're satisfied with looking at a quick look at the institution, let's say, for example, you had $1 million you wanted to get out the door today. This is what that would look like. Let's say I would do this CD, just like shopping on Amazon. You're going to click on what you're interested in. Okay, let me add these two to my shopping cart. In this case, this is the one I'd skip over because I already have money here. Let's say I wanted to do some 2-year CDs as well. So in this case, I would choose the second bank, and in this case, the fourth institution. So all I did was add those 4 items, those 4 issuing institutions into my cart. I click on my cart and I plug in the dollar amount I want to invest. In this case, I'm going to do $248,000. I set the amounts. And I do have some warnings about callables. We post those. This is a newer feature, by the way, within QuickRate, where we do allow callable CDs. So you're notified specifically if those are callable CDs. Now, if that is not something you wish to, a placement you wish to make, you can certainly delete those. We do give you all the details about the call dates for those two CDs. So again, it's up to you if you're interested in that or not. For this example, I'm going to go ahead and leave these in there. This will also alert you if the maturity date is going to fall on a Saturday, a Sunday, or a bank holiday. So in that case, we simply would move the maturity date to the next business day. So you earn a few extra days worth of interest if, for example, it fell on a Saturday or a Sunday or a bank holiday. In this case, all you do is click select all, and this button is grayed out for me, but I would simply click that. What it would do is send each of these 4 institutions an email to let them know, hey, this is David with ABC Credit Union. I would like to make an investment for 1 year at this rate for this dollar amount, today being the purchase date. These are all same day settle. And then the maturity date, of course, being determined by the term. And it would send that to all of these institutions. And at that point, what it would look like for you is, I'm sorry, not for you, for the issuer, it would look like this. So quickly, now we're going to switch our mind frame to the issuer. This is what it looks like for the issuing, in most cases, a bank that receives an inquiry saying, hey, this is David with ABC Credit Union. I would like to make a placement with you for a certain term for a certain dollar amount. So issuer, their new inquiries, what they're going to do is they're simply going to click on your credit union's name. It gives them all the detail they need to set this up. When you first become, as the investor, when you first become a subscriber of QuickRate, you let us know who your authorized signers are. You fill out two documents, a W-9 and a corporate resolution. Very simple documents. The corporate resolutions has the signatures of those authorized signers, basically the people at the credit union that are allowed to do the investing on behalf of your credit union. All the issuer, the bank, will do is simply click accept. It lets them know they've accepted. At that point, it sends an email back to you to let you know, in this case, me, David at ABC Credit Union, the inquiry you just sent out has been accepted, and it's now time for me to wire money to that issuer. So I'm provided all the wire instructions via QuickRate. All I have to do is initiate the wire, and this is important, directly to that issuer, as I mentioned before, because it is a direct transaction between the investor and the issuer. And then at that point, what the bank or the issuer will do is put that on their GL. They will create a certificate number, and then they will post a safekeeping receipt within QuickRate. You get an email to let you know, hey, everything's good on our end, and the CD is open, and it'll mature at some point in the future. So this process actually took me a lot longer to explain than it actually takes in real time. When you do this investing by simply going out on the site within QuickRate on this page, your bread and butter page, it takes just a couple of minutes. You click what you're interested in, you hit send, it sends it off to the issuer accepts it. Within minutes, you have a response back saying, absolutely, I'll take your investment. That's why I'm posting rates out on QuickRate. And then you wire funds. Now, of course, take into consideration time differences. If you're on the East Coast versus sending it to an issuer that's on the West Coast, that's going to take a little bit longer. But for the most part, these transactions are done very quickly and paperless. So a fully automated process. A couple of other things to show you on closing a CD. Let's talk a little bit about all right, so I made a few investments, maybe 5, 10, 20, 100 CD investments over the course of the year. Now they're starting to come to maturity. Well, what do I do then? First off, you get an email from us that will let you know, hey, David from ABC Credit Union, you have a few of your CDs that are maturing. Log in to QuickRate and you're going to be able to see those. In this case, I have an example of 3 different institutions that I have a CD maturing with. It's letting me know that 2 of those have rollover rates available. So if I choose, I could leave my money with them and roll it into a brand new CD for a brand new rate. This institution number 2, has said, wire requested. They're not even offering rollover rates. They're simply saying, I would like your wire instructions so I can send you your money back. Basically, they're looking for a quick signature to close out this investment. I'm going to show you how both of those work. So rates available, you click on the bank's name, it pulls it up down here, it gives you all the rollover rates for the different terms, and then you would simply click on the one that you're interested in. It pre-fills everything for you, and just all you have to do is hit send. All you simply did is you got an email, it says you have an investment rolling over. You chose a new rate, it rolls it over at that. You're going to get a brand new safekeeping receipt, and you're going to get an email from us to let you know, hey, you have a new safekeeping receipt in your QuickRate portfolio for the investment you just rolled over. In case of closing an investment, it's very simple. We have now what we call e-wire for the last few years, which again is just a quick way to hit a button. I unfortunately do not have a slide for that. We are in the middle of updating that. You simply click a button to say, yes, I would like to close my investment. And on the day of maturity, Beal Bank USA will wire those funds directly back to where they came from. So again, the point here is it's very simple to roll over an investment. It's very simple and quick to close an investment. There's not a whole lot of work you have to do on your end. No paperwork you have to fill out. That being said, let's take a quick peek at an example of the portfolio. So I've loaded a portfolio in here over the past few years. That's just a way for us to be able to see what this looks like for our investment portfolio. as well as if we were on the issuer side, these would be our deposits. Again, we'll talk a little bit more about deposits in just a moment. So on the investing side, refresh button. There we go. A little slow this morning. All right. So these would be all of the investments I've made. The safekeeping receipts would also be in here. There are none in here because I created this as a demo. The banks that turn red are the ones that have matured. So one of the things I've done in the past is where you can create as many portfolios as you like. I have one for quick rate CDs. I have one for my negotiable CDs. I have one for my corporate or simplicity that I work with. And then I have one for my matured CDs. So as I mentioned earlier, you most likely have CDs already from some other source that you will most likely want to keep as well in the future. So you can track all of your certificates in QuickRate, even if you don't purchase them through QuickRate, because there are, believe it or not, a few institutions that do not work with QuickRate. So when you make those investments, you can track those in here if you like, and you can separate them out by portfolio. Another quick shot about QuickRate. So this is one of the things that Sean was showing you earlier, a smaller snippet of it. This is what we call our rate survey. This is just a quick way to see what's out there in the QuickRate marketplace by term. You can see the best rate. You can see what it is at the different positions, whether it's the 10th, the average of the top 10, the 25th position, and so on. We can also, if you're tracking all of your CDs in QuickRate, you can also, take out those. So it'll reset this by only what's new to you. So basically, it's not considering what's already in your portfolio. So again, this could help you with your investment ladder in the future. There are many other features to QuickRate. I'm going to talk about the tools and reports, and then we'll talk a little bit about issuing, and then we'll finish this up. So in the tools, you do have a way to add in your payments on the investing side as you get those payments, whether they be ACH or paper check. If you wanted to keep up with all of those payments, you could, you're basically going to come in here, fill in the payment amount, and then click save. That way it updates the remaining amount that's due from that institution because of all the information we have about that CD, the purchase date, the maturity date, the rate, the interest frequency, and all that. We can calculate how much of a dollar amount is due from that institution. And we do break it down for you in what we call the detail sheet. So that kind of leads into, my apologies, I meant to click on the reports, into the reports. So here, what we're looking at are both, again, investor, issuer. So we click on what we're interested in at the moment. That would be the investor reports. We have 4 specific accrual reports, so you can balance your books. Apologies, these reports are a little bit older, and if I could make that a little bit bigger. There we go. So don't necessarily look at the numbers, more at the column headers that are in here. It's just a way for you to be able to balance your books back to your GL. And then we have a ton of different investment reports. I have favorited a few because those are a lot of the ones that I present over and over again because they help credit unions. For example, investments by insurance type. This is one of those, and again, let's make that a little bit larger. And that's a little too large. There we go. Your call report every quarter asks you to do 2 things. One, break down your investments by type. Is it a bank or is it with a credit union? And then also by remaining maturity. So again, these are things we know you have to do for your CD portfolio, not just ones you've bought through QuickRate, but all of your certificates. So it's something we're trying to do to help you save some time at the end of the quarter as well. There are tons of different reports in here. Certainly, you can go through these and kind of take a look and see what fits your institution and then favorite what you need the most. We do have custom export reports, so you can tell the program what specifically you're looking for. Again, pretty much a report that there's going to be a report out here to help you for whatever it is, whether it's for auditors, examiners, or for your board or for yourself. let's go into briefly talking about issuing. Again, I know most of us are here for the investing side, but we never know when that might change, whether in the next 6 months, 6 or 12 months, you decide you need funds. You, as a credit union, can post your rates to other credit unions. And of course, if you have a low income designation, we can even post your rates to banks. That is, of course, up to you. There are plenty of different benchmarking tools out here to help you in where to post your rates, whether it be in the shorter terms, the middle term buckets, or even the longer terms. We have data to show you on where money is coming in and how much. So for example, if we look at the 1 year position monthly, leave this at this. So again, this is just kind of another one of those benchmarking tools to help me understand as far as how much is coming in via rollover, what's coming in from me just posting rates. Over the last, whether in this case, the last month, I can break this down by week 1, 2, 3, and 4 as well. So again, you can also publish rates if you'd like to. Sean, I believe I've mentioned it a few times at this point, and Sean mentioned it earlier. Whether you're on the investing side now, you may be on the issuing side later down the road. Let's see if there's anything I forgot. We went over the rate survey, the portfolio. One thing in the tools I did forget to mention is the merge letters. Mainly the one I'm talking about and referring to is the audit letter. So all of the funny looking information in between pound signs is actually merged into this document to help you when your auditor comes into your office and says, hey, I need to audit these investments. What this is going to allow you to do is print it for all your CDs. And it's going to make it easy on you by filling in all the information so you can get your auditor out of your office a little bit faster. You can personalize these, and there is a little bit of information like what I'm highlighting here that you'd want to fill out. But the personalization that I'm referring to is if you wanted to make space for your logo, or if you had something specific you wanted to type in yourself, you could do that as well. But for the most part, that's what I wanted to show you as far as the live login. If any of you would be interested in a more detailed look and comparing your portfolio, myself and Jason Heinrich would be the ones to help you with that. So with that being said, that is a tour of the marketplace. A few more things I'm going to cover on the slide deck. So this just kind of very quickly reviews some of the things we talked about. Access to real-time information. Our institutions, our issuers come in and out of the market as they need. They take their rates out of the market when they're done looking for funding. So there's real-time live information. It's always moving, whether you're on the investing or issuing side. It's a direct funding source. Investing through QuickRate is just simply made simple and easy. You can invest as much or as little as you like. There is no limit. So it's not like you can only invest in 1 million or 5 million or 20 million. Invest as much or as little as you like, depending on what your needs are. Debbie Walker is our regulatory specialist, and she has any kind of regulatory guidance that you need. And then, of course, any kind of support that you need as far as customer support, those would be the 3 people that I mentioned earlier: Jennifer, Zoe, or Andrea. So we do not outsource anything to any other country. It is someone within Georgia that you're going to speak to. So with that being said, I'm going to go ahead and turn it back over to Sean. Sean, I can do the controls if you'd like to jump back in.
Yeah, that sounds great, David. So, as David mentioned, he and Jason, obviously, outstanding job demoing the QuickRate marketplace today. But he and Jason can certainly take care of you along with our customer service team. So, please reach out to him or Jason to learn more, or just again get a little more personalized walkthrough. Again, I'll just double check here for any final questions or chats that came in. I don't see any. So thank you all again for joining us. We will send out that email with a link to the recording and a copy of the slides today. Certainly encourage you to join us Friday if you have any questions or for our Cecil Coffee Talk. And then finally, if you would like to move forward with us, certainly reach out to us. We'll discuss your credit union's current situation. We can discuss pricing, give you a more personalized tour, or you can always schedule a demo at quickrate.com. So one last look. Again, thank you all very much for joining us today. If we can be of any help in any way, don't hesitate to reach out. Thank you for taking time out of your busy day, and we'll look forward to seeing and speaking with you on the next Quick Rate webinar. Thanks again for joining us. Have a great day.
Thanks, everybody. Thank you, Sean.
Thanks, David.